Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China steel market prices and analysis every week. This week, affected by the better-than-expected China-US tariff adjustments, sentiment in the steel market has recovered, leading to a general increase in steel prices. The spot price of domestic hot-rolled coils rose by 50 yuan per ton this week, and the price of rebar increased by 40 yuan per ton. At the macro level, the China-US tariff adjustments exceeded expectations. Tariffs will return to 10% for 90 days, starting from May 12. Improved trade expectations continue to support export demand under the logic of rushing to export. Meanwhile, the decline in US CPI data provides more basis for the Federal Reserve to prepare for interest rate cuts. In China, earlier reserve requirement ratio and interest rate cuts boosted market expectations, but had limited impact on the actual increase in steel demand. In the industrial sector, due to last week's price decline, the weekly output of the 5 major steel products decreased by 58,200 tons. The output reduction was mainly concentrated in coil mills, while rebar production recovered slightly. On the demand side, demand rebounded in the second week after the holiday, with weekly apparent demand recovering by 685,600 tons. Except for cold-rolled products, demand for all other major steel products increased. With the arrival of the seasonal off-season, rebar demand is expected to decline. For plate products, demand for cold-rolled series has slowed down, and the price spread between hot-rolled and cold-rolled products has narrowed. In terms of inventory, due to this week's demand recovery, the 5 major steel products returned to destocking. The increase in molten iron mainly flowed to billets, supporting the destocking of major steel inventories. Looking at this week's overall situation, the impact of earlier tariff adjustments has weakened, and the high molten iron production may be sustained for a longer period. The current iron ore prices support steel production costs, narrowing the downside space for steel prices. However, as the peak demand season approaches its end, the upside space for steel prices is further constrained. Moreover, before the China-US game is finally resolved, there may be many macro-level fluctuations. Due to the prevalence of sentiment-driven trading in the macro market starting next week, the focus will shift more to industrial fundamentals and real-world data. At least we need to observe the speed of inventory accumulation during the steel off-season to further assess whether there is room for subsequent steel price increases. In conclusion, as the steel demand off-season gradually begins, macro-level positive factors have not enabled steel prices to reverse, and prices are likely to fluctuate mainly. For procurement, it is recommended to focus on just-in-need purchases. In terms of institutions, with the seasonal decline in steel demand, more institutions have become concerned about the downward trend in demand. As the prices of raw materials for molten iron remain weak, after the decline in molten iron production, the central price of steel may further decline. Therefore, in the long-term outlook, almost all institutions are mainly bearish. In summary, as the off-season for demand approaches, it is still recommended that only rigid demand users focus on replenishing inventory as needed. In terms of varieties, billets and coil plates are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.